Hello everyone and welcome to the second session of our series on CFA, revise the entire CFA syllabus in 6 days, and the topic today would be FSA, as FSA is again considered one of the relatively tough topics. Our presenter today is Mr. Ami Khurana. He is an expert faculty. He has taken several classes with EduPristine, and today he would simply guide you through the tips and tricks to follow in order to crack the session of CFA. In case you have any doubts, you can simply type it out in the questions box, or you can mail it to yashu@eneev.com. That's spelled as YASHU @eneev.com. In case you have any specific doubts, on our website, that's edupristine.com, we have a forum dedicated to doubts where our in-house experts sit and solve all your doubts. So you can post your doubts there, the very particular doubts. And otherwise, the general doubts would be taken up by Ami towards the end of the session. So you can take it over from here, Ami.
Thanks, Shreya. Is everyone able to hear me properly? You guys can type if you are not able to hear me. Okay, since I haven't received any negative response, so I believe everybody can hear me, and I will start the session. Today's session, it is mostly about tips and tricks for the financial statement analysis section and the general CFA exam. We would not be taking in any specific questions to solve in a particular topic. However, I will be taking you through generally what mistakes students make and what are the topics that they miss out on and what are the things that they need to remember while they are taking up the FSA section in the CFA exam. I am assuming by now all of you have at least revised the FRA and are ready to solve most of the questions that are given to you. In these slides, we will go by study session. There are 4 study sessions, 7, 8, 9 and 10. And in each study session, I will walk you through what are the important points and what you should be taking note of. Now, please know that whatever I mention is not just all in the FSA. There are other things as well, but there are certain things that students generally miss while reading these sessions. So I will focus on those topics only. First of all, in study session 7, regarding the audit reports, remember the 4 types of audit reports. The questions that generally come in these audit reports are, you have to identify what kind of an audit report it is. So you have to know what audit report is issued under what circumstances. Also, most of the students miss this point that auditors only check whether the financial statements are prepared according to generally accepted accounting principles, and they do not check the financial statements till the last dollar, or they do not check the accounts to the last dollar. Preparing the financial statements is the responsibility of the management and not of the auditors. They are prepared for the shareholders but are used by a wide variety of users. When I say wide variety of users, that means security analysts, investors, banks wishing to give debts to a company. So the next point is the 6 steps in financial statement analysis framework. Again, I see a lot of students getting confused because when the question comes, they ask a particular process or a particular method and they want you to identify what step of the framework it is. So you need to remember the 6 steps and what happens in each one of them. I will quickly walk you through. The first one is the objective, where you define the objective, whether you are a security analyst, investor, a bank, a credit rating agency. The second one is you collect data. That means you collect all the financial statements, the news, the corporate announcements, everything available for a company. The third one is process data, where you start creating your ratios or common size income statements and balance sheets. The fourth one is analyzing data. Once you have the ratios in front of you, you look at the trends and start analyzing them across time or across companies. The fifth one is you make a recommendation or come to a conclusion after your analysis. And the sixth one is periodic monitoring of your conclusions or recommendations, because every quarter or every few days there are new announcements about the company. So you need to periodically monitor your recommendations. The next point is the basic and extended accounting equation, that is assets is equal to liabilities plus equity. Now you can expand the equity portion of the equation and then it gives you assets plus liability plus contributed capital plus retained earnings plus revenue minus expenses. So what happens in the exam is the whole equation is jumbled up, and that confuses the students a lot of times. So you have to understand how to expand the equation from the basic equation of assets is equal to liabilities to equity into the extended form. Also, you could be given questions on how to record transactions in the balance sheet and what impact will it have on the equation. Remember, the equation has to balance always. If assets go up, some other assets will have to go down, or on the other side, right hand side of the equation, liabilities or equities will go up. We move to the next slide. Okay, in some of the points I have also mentioned what page number it is on the Schweizer notes. So this is not the CFA book, it is the Schweizer notes. The first point is relationship between income statement, balance sheet, cash flow statement and statement of owner's equity. Now, why understanding this relationship is very important, because all throughout the FRA or FSA curriculum, you are asked of the impact of various leases or bonds or ratios or inventory methods used on balance sheet, income statement and cash flow statement. So unless and until these relationships are clear, you won't be able to solve such questions. For example, from the income statement, in the net income, if you take out dividends, it goes to retained earnings in the statement of owner's equity and in the balance sheet. Similarly, the net change in cash flow statement of cash goes to the balance sheet, and that's the increase in the cash on the balance sheet. So make sure you are thorough with the relationship between all the four statements. The next point is the IASB conceptual framework. Now again, it is theory and it is very easy, but the only point is that you have to remember all of it. The qualitative characteristics, remember there are two basic qualitative characteristics and there are four other qualitative characteristics that support the two fundamental characteristics. The two fundamental characteristics are relevance and faithful representation. In the questions, generally these characteristics are jumbled up and then you are asked to identify which ones are the fundamental characteristics and which one are the supporting characteristics. So learn to distinguish between them and read it multiple times so that you are thorough with these characteristics and the objective.
Hi, Ami, I'm sorry to interrupt you, but can you please be a little louder? I'm getting various messages requesting you to be a little louder. So could you just hold the microphone a little closer to your mouth?
Okay.
Yeah.
Guys, I will be a little louder now. If you can't hear me, just let me know.
Okay, so now we're getting positive responses saying that you can hear the presenter clearly. So I think you can carry on. Thank you.
Great.
Okay. Yeah.
The third point over here is key concepts of financial reporting standards under US GAAP and IFRS. Now note, there are very minor changes over here. For example, FASB uses the definition of an asset wherein ISB uses the word resource, that asset is a resource from which future economic benefit flows in. So note these minor differences. The questions generally play around with these differences. So there are three differences, page 39 of the Schweizer book. You can have a look and do not get confused during the exam. Now these are smaller things. These questions are easy pickings. So make sure you are thorough with this theory part as well. We move on to the next study session, which is study session 8. The first part is revenue recognition methods. Now we have 4 main revenue recognition methods: percentage of completion, completed contract, installment sales, cost recovery method. The main thing you need to remember over here is that you could be asked, you could be given a situation and you could be asked to apply the correct revenue recognition method. Now remember, in the first two ones, the percentage of completion and completed contract method, the certainty of payment is there. In the next two ones, installment sales and cost recovery method, the certainty of payment is not there. So this is the main point to remember. Now percentage of completion, the revenue and cost are known with certainty. Completed contract method, revenue and cost are not known with certainty. Installment sales method, again, revenue and cost are known. Cost recovery method, revenue and cost are not known. You should be thorough with the calculations, how to calculate revenue, cost of sales and gross profit for each one of the items. We move on to the next slide and look at the treatment of non-recurring items. Now this is one of the favorites of the CFA institutes, generally missed by students because there is not much stress given on this particular topic in the Schweizer book. Look at discontinued operations. Make sure you understand what measurement date is, what phase out period is, when to record revenues and losses or accrued gains and losses for discontinued operations. Similarly, for unusual or infrequent and extraordinary, that is unusual and infrequent, you need to identify the difference and how they are treated in the income statement. We move on to the EPS calculations. For EPS calculations, the first thing that you need to remember, any potentially dilutive security, you need to check the impact of dilution on the basic EPS. If the security is reducing basic EPS, you include it into the calculation of diluted EPS. It means it is dilutive in nature. If the security is increasing basic EPS, you do not include it in the calculation of basic EPS. Now most of the candidates do not check for dilution and directly calculate the diluted EPS, which is not the right way to do it. You will be wasting time in the exam. Once you have identified that and you are calculating or you are checking for dilution, remember, for debt, multiply interest with 1 minus tax rate in the numerator while checking for dilution. And for stock options, check the exercise price only with average market price. Generally in the exam, they give 2 or 3 different prices other than the average market price. Ignore the price at any date, at the beginning of the year, at the end of the year, or at a particular date during the year. Just use the average market price to check for dilution. If exercise price is less than average market price, the security is dilutive, otherwise it is anti-dilutive. Now I'm assuming that you guys know rest of the calculations and the formulas, and based on that assumption I move forward to the next point, which is other comprehensive income. Other comprehensive income has 4 main items. So you need to know these 4 items that are not present in the income statement but in the stockholders' equity and pass to the other comprehensive income. The foreign currency translation gains and losses, adjustment for minimum pension liability, unrealized gains and losses from cash flow hedging, and unrealized gains and losses from available for sale securities. Now, the last point is important because in the question they could change this and make it held for maturity securities or trading securities. Remember, that is not part of other comprehensive income. Or also, out of these 4 options, they could give you just one option and 2 options could be completely different. So basically, you need to identify what is part of other comprehensive income. We move on to the next slide, which is measurement basis, the first point. The measurement basis of assets and liabilities is provided on page 88 and 89 of the Schweizer books. Now there are a lot of items over there, but there are certain items that are tested again and again, especially inventory, plant, property and equipment, investment property, and intangibles. For inventory, IFRS and US GAAP have different treatments wherein you check for lower of cost or net realizable value under IFRS and lower of cost and market value under US GAAP. And market value again has an upper limit or lower limit. So remember, when you are checking for US GAAP, make sure the market value does not go above the net realizable value and it does not go below the net realizable value minus the standard profit margins. Now, standard profit margins are assumptions made by the management. Similarly, for plant, property and equipment and intangibles, there's a difference between US GAAP and IFRS. Especially intangibles, also review the difference between software developed for sale and software developed for internal use. The difference between US GAAP and IFRS. Another point, for intangibles, research and development, there's a difference between US GAAP and IFRS. These are internally developed intangibles. So notice the difference between these two as well. We move on to the next point. Now again, this is one of the CFA favorites. Page 94, it says difference between held to maturity. Now held to maturity are only debt investments and not equity investments, because equity stocks do not have a maturity. So remember, they could ask you if stocks could be placed in held to maturity category. Only debt securities can be part of held to maturity. Then we have held for sale and trading securities. Now there is a difference in treatment regarding realized gains, unrealized gains, recording these securities on the balance sheet, whether at amortized cost or at fair value. And when the market value changes, where are the changes recognized, whether in the income statement or other comprehensive income. So make sure you are thorough with the changes, because this is a little confusing and the questions could make it difficult even further. So the best way to remember this is make a table and keep it with you all the time and keep looking at it after like every 2 hours or 3 hours so that you remember these things. And you can do that with other stuff that is difficult to remember. Again, another difference between IFRS and US GAAP, which is very confusing, is the treatment of dividends received or paid, interest received or paid, taxes paid. Now the best way to remember this is that everything under US GAAP is under cash flow from operations except for dividends paid. However, under IFRS, you have the flexibility of categorizing it under cash flow from operations or its logical placement in the cash flow statement. For example, dividends received, you can place it under cash flow from operations or cash flow from investment. Similarly, dividends paid, cash flow from operations or cash flow from financing. We move on to the next point, that is identify individual constituents of free cash flow to the firm and free cash flow to the equity. Now the numericals on this particular portion of free cash flow provide a lot of information, and sometimes information is not required for the calculations. Also, you need to understand the relationship between the two. That means how to calculate free cash flow to equity when you are given free cash flow to the firm and other information. So you should not only be able to solve them independently, but solve one or the other if the other information is. So the relationship between the two formulas is very important. The next point, we move on. This generally comes while calculating the cash flow from operations through the indirect method. Now gross PP&E and accumulated depreciation of the disposed asset is not given directly in the question. You could be given income statement and balance sheet information, and you could be asked to fish out this information from the provided data. Now remember, gross PP&E in the balance sheet at the beginning of the year plus any additions during the year should equal gross PP&E at the end of the year. Now if that does not equal, the difference is generally the gross PP&E of the disposed asset. Similarly, for the accumulated depreciation, the accumulated depreciation figure given on the balance sheet, the beginning of the year figure plus depreciation expense on the income statement should be equal to the accumulated depreciation figure at the end of the year. If it is not equal, the difference is the accumulated depreciation of the disposed asset. Again, for cash dividends paid. Now remember, we have to do a bit of detective work over here. First of all, we find out the dividends declared during the year. Now the dividends declared during the year may not be same as the cash dividends paid. How you find out the dividends declared is you take the difference between retained earnings at the end of the period and the retained earnings the beginning of the period. The difference should be equal to net income minus dividends. This dividend is the dividend declared. Net income you can get from the income statement. You will get a figure for dividends declared. Now in the balance sheet, look at the figure of dividends payable at the beginning of the year and at the end of the year. The difference between dividends payable and dividends declared is the cash dividends paid. There are times when the CFA curriculum has asked specifically to find the cash dividend paid when given income statement and balance sheet data. Whenever you are given such kind of information, you will be given income statement data for 1 year and balance sheet data for 2 years. We move on to the next point, which is the ratios. Now, there are 4 or 5 different types of categories for ratios, like activity ratios, solvency ratios, profitability ratios, valuation ratios. You should be able to identify and categorize ratios into these 5 different categories. Also, regarding the constituents of individual ratios, especially solvency ratios.
Could you please repeat the last point from previous slide? Vivek had it out in that.
Sure.
Okay.
Just a second. Finding out the cash dividends paid. Yeah, is that the point?
Yes,
Clear it
yes.
out?
Yeah. Could you just elaborate on that again?
Sure. Yeah,
Yeah.
sure. So the question generally asks you to find out the cash dividend paid. The information given is an income statement for a particular year and balance sheet for 2 years. Now, how you start is you first look at the change in retained earnings from the balance sheet between the 2 years. Now that change should be equal to net income minus dividends. Now this net income minus dividends is the dividends declared, not the dividends paid. You can find the net income from the income statement and you have the change from the balance sheet in retained earnings. From this you can find out the dividends declared. Now what you have to find out is the cash dividends paid. Go to the balance sheet again, you will be given a figure of dividends payable. Now when you look at dividends payable, look at the change. If this change is not equal to the dividends declared for that particular year, the difference between the change in dividends payable and dividends declared is the cash dividends paid out. Now I have seen a lot of candidates who are not able to solve it. If you have any questions regarding how to find out cash dividends paid, we'll be taking that up again during the Q&A session next week. Try and solve this from the book. If you have questions, we'll take it up again. So we move on to the next slide. We have discussed ratios over here. Now in the solvency ratios, make sure you are able to identify the constituents of the ratios like debt to equity, debt to assets, financial leverage, interest coverage, and fixed charge coverage. The reason I say that is in the exam the questions generally give you a lot of data, or you could be provided with income statement and balance sheet information and you could be asked to calculate these ratios. So unless and until you are clear with what constituents go into each of these ratios, you would not be able to fish out information from the income statement and balance sheet. Now while calculating ratios, make sure you use the average of the balance sheet values when calculating mixed ratios. Now, mixed ratios when one value is from the income statement and the other value is from the balance sheet. While calculating pure ratios where both the numerator and the denominator are either from the income statement or from the balance sheet, you can use the particular year value rather than average values. We move on to the next point, which is DuPont analysis. Again, a favorite of the CFA curriculum. You would either see this in the morning or in the evening, or you could see some part of this DuPont analysis in the morning as well as in the evening. Now, the main thing to remember over here is that DuPont analysis, they include this particular equation where they ask for growth rate, which is equal to D, which is retention rate, into ROE. Now you could not be asked to directly calculate ROE, but you could be asked to find out the growth rate, and you will be given information like net profit margin, ROA, equity multipliers, interest burden, tax burden. The best way to solve for an ROE question is to expand these ratios, combine them and see which combination arrives at return on equity. A lot of times they give extra information to confuse the candidate. There are times when you do not require all the ratios to get to ROE. You can just use a combination of 1, 2 or 3 ratios to get to ROE. So make sure you expand these ratios before calculation, and whenever a question for growth rate comes, use this, write down this equation and try and find the ROE first. We move on to the next slide. We're coming on to study session 9. Inventory, again one of the very important topics. The first point is you should be able to identify the difference between costs that are capitalized or that are used on the balance sheet in inventory and the costs that are to be expensed in the income statement. Again, they generally give you a table with a lot of costs involved, and you have to fish out information for that have to be included in inventory or costs that have to be expensed. So just make sure you are thorough with it. The second point is basic calculation in inventory, that is using these three methods, FIFO, LIFO and average co, using periodic and perpetual method. What you could be asked is to calculate cost of sales, ending inventory and gross profit. I'm assuming at this stage everybody can perform these calculations easily. Also, you could be asked not to perform a calculation or not to give out an answer, a numerical answer, but they could ask you the impact of using FIFO or LIFO or average co on income statement items or balance sheet items or any of the ratios. So here is where the relationships between the income statement, the balance sheet and the cash flow come in handy. So once you know the relationship and what you will be able to find out the impact. We move on to the next point, which is measurement of inventory at per of cost or net realizable value. Now again, most of the candidates miss this part of the inventory because it is not explained in detail in the Schweitzer notes. I want you to identify the difference between IFRS and US GAAP. Now we have done this in the earlier slide also. I'm stressing it again. Generally the CFA Institute sneaks in a question of for the measurement of inventory. Make sure you know the difference between the two, IFRS and US GAAP. The fourth point is financial reporting of purchase, internally developed and intangibles acquired in business combination. Now intangibles with finite lives are amortized just like depreciation, like straight line, double declining balance or units of production. Infinite life intangibles are not amortized but tested for impairment such as goodwill. So if they ask in the exam to amortize goodwill, it could be a trick question. We move on to the next slide. Now depreciation calculations are generally easy, but what confuses candidates is the impact of various depreciation methods on the financial statements, and also if the assumptions in the depreciation method changes, that is the useful life or the salvage value, what is the impact on income statement items, on balance sheet items or the ratios. So practice these type of questions because they are CFA favorites. You will find a lot of these questions. We move on to the next topic, income taxes. Now income taxes, I would advise everybody who's scared of taxes, finding it too difficult, to at least remember these 4 points, because generally the more difficult the topic is, easier the question is. So the first of all, tax base of asset. It is nothing but the carrying value of the asset in the tax accounts. Second, tax base of liability. Tax base of liability is in most cases 0, where we take the carrying value of the liability on the balance sheet and subtract it with the same amount, because that will be deducted in the future from tax accounts while calculating taxes as it has already been taxed this year because either cash has been received earlier or for some other reason. Then you should be able to identify how deferred tax assets and liabilities are created. Generally, when we pay more taxes in the tax accounts, a deferred tax asset is created. If we pay less taxes in the tax accounts, a liability is created. There are two types of liabilities and assets, which are permanent and the other one is temporary. Make sure you read that what causes permanent differences and what causes temporary differences. If permanent differences are not expected to be reversed, a valuation allowance is created, which is a contra account, which reduces the deferred tax asset account in the balance sheet. If deferred tax liabilities are not expected to be reversed, we take them out of liabilities and move them to equity. The most important equation around which most of the questions are centered in taxes is tax expense, which is the tax amount on the financial accounts, equal to taxes payable, which is in the tax accounts, plus changes in deferred tax liabilities minus changes in deferred tax assets. Now remember, when deferred tax liabilities increase, we add it to this equation, and when deferred tax liabilities decrease, i.e. that the change is negative, we subtract it. For deferred tax assets, when the deferred tax assets in the balance sheet increase, we subtract from this equation, and when they decrease, we add it. Also, in the choice of notes, you are given differences. The table is provided for differences in US GAAP and IFRS. It provides you the differences in tax accounting. Make sure you go through it, because the CFA curriculum can pick up any question or any of the differences and ask a question. But again, the questions would be straightforward and simple, most likely in this particular section. So even if anybody who has not read it, just try and understand the basic terms.
I'm sorry to interrupt you again, but we are getting several responses. People are asking you to explain this again. I guess Swati has a doubt, so wishes that you can explain it again. So could you do that?
Yeah, I will explain it again. Can you read me the particular doubt she has, because I can't see the questions on my screen at the moment. Is it possible, Yashu?
Yeah, Swati just says, can you please explain this again? That's it.
Sure. The taxes part?
Yeah, tax base of liability.
Okay. So a tax base of liability in most cases is 0. The formula for it is the carrying value on the balance sheet minus any amount that will be deducted in future from tax accounts. Now let's take an example for this real quick. What happens is, when a company receives cash in advance for a particular good or services that it has not yet provided, in that case, the company records a liability on the balance sheet, and that amount, the cash received, is taxed in the tax accounts. So we have a carrying value on the balance sheet of the liability because we haven't yet provided the goods or service, and that amount has been taxed in the tax accounts this year. Now next year, when we record it as a revenue, it is deducted from tax accounts because it has already been taxed when we receive the cash. So that's the reason tax base of liability is 0, that is carrying value on the balance sheet minus any amount that will be deducted in the future from tax accounts. I'll repeat once again, when we receive cash for any goods or services that we have not yet provided, we record a liability on the balance sheet and do not record a revenue in that particular year. But the tax authorities tax us as in when we receive the cash. Now next year, when we provide the goods and services, we take out the liability and include it in revenues. Now, if we include it in revenues, it will be taxed again in tax accounts. Therefore, we have to take it out from the tax accounts. And this amount that we take out from the tax account is deducted from the value of the liability that was created initially. And hence, tax base of a liability is 0. Move on to deferred tax assets and liabilities. I hope it is clear. If it is not clear, you can put in a question again and the organizers will let me know and I'll take it up again. Now you should be able to identify how deferred tax assets and liabilities are created, temporary and permanent differences between tax accounts and financial accounts. And if permanent differences are created, then how do we treat those deferred tax assets and liabilities? We move on to bonds. Now, the thing that most candidates leave is the derecognition of bonds or when bonds are retired before maturity. Now, you need to understand the treatment over here. If the market value of the bond is greater than the carrying value of the bond or the balance sheet of the company that has issued the bond, the company will incur a loss. If the market value of the bond is less than the carrying value, the company will show a gain. If the market value is too high, then the company is said to be less solvent, because if they have to extinguish the debt, they will have to go out in the market and they'll have to purchase that debt, which is much more than the carrying value of that debt on the balance sheet. Again, this will also be impacted because of the treatment of bond issue costs under US GAAP and IFRS. Under IFRS, bond issue cost is deducted from the issue price when it is recorded on the balance sheet. Under US GAAP, it is reported as an asset, as a prepaid expense and amortized over the life of the bond. So when the bond is retired before maturity, under US GAAP, we deduct the unamortized cost of the bond issue cost from the carrying value of debt on the balance sheet along with the market value of debt to find out the loss or gain. So what happens is we have a carrying value of debt, we subtract the market value of debt, and we subtract the unamortized cost of issue. To find out the gain or loss under US GAAP. Under IFRS, this term will not be there because the issue cost was deducted at the time of recording the initial liability on the balance sheet. One of the most important points to remember in bonds is that you have to use the market rate of interest at the time of bond issue to calculate the initial liability and the interest expense thereof. Do not use any other interest rate provided to you. Only the market rate at the time of issuance is to be used, which remains constant throughout the life of the bond. Now we move on to the next point, which is leases. Now again, relationships between income statement, balance sheet and cash flow are very important over here, because you could be asked for the impact of using operating versus financing leases for either the lessor or the lessee in the income statement, in the balance sheet or the cash flow statement or any of the ratios. So you need to be clear with the relationship between the statement and how the ratios will be impacted. Now remember, for the lessor, there are two types of finance leases. The first one is the sales type lease. Sales type lease are generally recorded by lessors who are manufacturers or dealers of the asset. Reason for that is because they also record a profit on the sale of the lease, and they make money through the interest on the financing of the equipment. Under the direct financing lease, no gross profit is recognized because the lessor is a leasing company, not a seller or a manufacturer or a dealer of the equipment. So under direct financing lease, the gross profit is zero. The lessor makes its money through the interest rate. See, it is theory, so just don't miss on it. The questions are sort of free. So the important points to remember in this study session are the fraud triangle, the three conditions present when fraud occurs, basically the incentives, the opportunities, and the rationalization. Now, each condition has specific risk factors. The question that CFA frames is, they would give you a risk factor and they would ask you to identify a condition to which it belongs. So make sure you understand what are the risk factors under each condition. The next point is the ability to identify activities that result in low quality earnings. The most important of it is LIFO liquidations, which is a CFA favorite. Now, LIFO liquidations can be identified through declining LIFO reserves. Each company using LIFO inventory valuation method on the balance sheet have to provide a LIFO reserve in the footnotes. LIFO reserve is just the difference between what the inventory value would have been under FIFO than what it is under LIFO. So when the LIFO reserve reduces, it is called as LIFO liquidation. The liquidation, the condition under which LIFO liquidation happens is when the company starts selling more inventory than it is purchasing. So in periods of rising prices, the company starts eating into its older inventory which was bought at cheaper prices. This unrealistically reduces the cost of goods sold because now the cost of goods sold includes inventory which was bought earlier at cheaper prices. Remember, the company has stopped replenishing its inventory. It has starting to sell more inventory than it could buy, and hence this particular situation or condition is called LIFO liquidations. Why it is essential for the analyst to recognize a declining LIFO reserve is that it is unsustainable and it could be a signal of low quality earnings. Again, the next point is aggressive pension assumptions. Now there are a lot of assumptions that go into finding out the net pension assets or liabilities or the expense on the income statement. Changing these assumptions by a percentage point can increase the income expense, pension expense on the income statement by a big amount. So it is essential to identify the impact of these assumptions. The main assumptions to note is that if the discount rate of the liabilities increases or decreases, what would be the impact on pension expense? If the average salary at the time of retirement of the employees increases or decreases, what would be the impact on the income statement? Or if the average age of the employees after retirement increases, then what would be the impact? So there are 3 or 4 major assumptions that are tested on in the CFA curriculum, and their impact on the income statement or on the net pension asset or liability on the balance sheet. So if anybody is not clear, please mark it down as a question. We'll try and take it up at the end of this session. If you are not able to do that, we will take it up during the Q&A session, doubt clearing session next week. Again, the last point in this slide is the appropriate adjustments that an analyst needs to make while comparing ratios or financial statements for various companies in a similar industry. Now the major ones are adjustments for inventory. We have to make sure that the companies are using the same inventory valuation methods. Second one is depreciation, the same depreciation methods for plant, property and equipment and intangibles. So these are the main adjustments that the analysts need to make while comparing financial statements. Now we are done with the topics. I can take up any questions that we have on the topic, or I could move on. I think we have very little time left. We will move on to the general CFA exam tips. Now guys, remember the exam is divided into 3 parts. That is 40% of the questions would be very, very easy. That means it would not take more than 20 seconds to answer those questions. Another 40 to 50% questions would be mid-level difficulty. That means there will be certain amount of calculations in those questions and you would need to think a little. Remaining 15 to 20% questions are generally very tough. So the best approach to the exam is scan the exam and not do it sequentially, questions from 1, 2, 3, 4. Scan the exams, identify the easy questions and try and answer them first. What will happen is that you would have done 40 to 50 questions in like half an hour and you would be fairly confident that you have answered them correctly. Now when I say easy questions, they are easy when you are well prepared and they are like 15 to 20 second questions. Now this will improve your confidence and also give you more time to solve mid-level difficulty questions which require calculations, which require more than the average 1.5 minutes that you get for each question in the exam. Your target should be to score 100% in all the easy questions that you are able to identify. The mid-level difficulty questions, you should aim to score at least 80% in this part of the exam. And then the tough one, the best approach, if you can solve them, very good. If you can't solve them, make educated guesses and move on. Make sure you leave at least 15 minutes to review your answers at the end of the exam. If you are well prepared, the exam can be finished in 2.5 hours. It does not take 3 hours to finish the exam. Practice at least 5 mock exams from Schweizer books and CFA website as actual exam conditions. And grade your exam, look at your weak areas, analyze them, study again from the book, and then move on to the next exam. There is no point giving an exam and not improving on your scores. So make sure every exam you are improving on your scores. Whenever you see a question with ask for least accurate option or option which is not true, just circle it. What happens is candidates while reading the options forget that they're looking for the least accurate option and sometimes mark the option which is true and which is accurate. So make sure you highlight this, you mark it in the question paper and then read the options. We move on to the next slide I hope everybody has already seen their exam center. Do not leave it to the last day. If you're not able to find it on the last day, you will become nervous and you should avoid such a situation. Look at the CFA website, look at all the requirements for the exam. Make sure your pencils, calculators, IDs are ready well before the exam. Do not go last night before the exam buying these supplies. In case you're booking a cab, make sure it is a reliable company. I have heard a lot of students where they have booked the cab and the cab has cancelled at the last minute. The second part of the exam, you know, there are two exams, 9 to 12 and 2 to 5. Now the second part of the exam gets very, very taxing. It is difficult to concentrate. Most candidates feel dizzy or nervous during this time. So make sure you have black coffee or something to keep your energy level up during the break, and keep your meals light during the break. Do not eat heavy food. Do not eat oily food. That will make you lazy and sleepy. Keep your energy levels up for the day. The exam room could be either too cold or too warm. So take up a jacket which you could easily remove, or take a shawl with you which you could easily remove and adjust to the conditions in the exam room. That's it. From ready to take up questions if we have time.
Yeah, we do have time, and let's take up questions one by one. So,
Sure.
Nisarg has a question: how do you convert from LIFO to FIFO or vice versa?
Okay. Yeah, Yashu, which one do you want me to take up?
Yeah, it's this Nisarg one's. This is he says, how do you convert from LIFO to FIFO and vice versa? I'll simply read out the question so you can answer it. So we'll try to make it fast. Yeah.
Sure. Converting from LIFO to FIFO or vice versa.
Yeah.
See, I would best suggest you keep these questions for the doubts clearing session, because it is difficult to explain while talking.
Right. Okay, sure.
They are very easily provided in the book. Yeah.
And
Is
in
there
any
questions
case,
regarding the exam or the tips or something?
we do have a forum active, which is on www.edupristine.com. There's a tab called forum. You can simply click on that. It's free for all. You can register, and we'll have our in-house experts clearing all these doubts. So I believe the rest of the doubts. Okay, I'll just go in the reverse order. So
Okay.
why only TA2 plus calculators recommended? Shubhank Modi has a question.
Yes, that's right. TA2 plus is generally easy to use, Subhank. So that's why it is recommended. It is much faster, much easily available, widely utilized, widely used by industry professionals as well. That is why it is recommended for the CFA candidates also. So while you are once you are given your exam, you are working, that's the calculator that most industry professionals use.
Okay, and Devinder has another question. He says, does it affect my CFA level 2 FRA if my concepts in level 1 FRA are not strong? Can you just give an idea of what the topic in level 1 FRA which will extend to level 2 FRA?
See, level 2 FRA, you have to be very thorough with your equity investments, derivatives, quant analysis, and I think these are topics out of FRA. But in FRA, bonds is something that you need to be clear with. Then inventory management, leases. Level 2 has a lot of pension expense, and that delves into your pension calculation. So make sure you are thorough with whatever is provided in level 1 in pensions. That is very important. So yeah.
Okay.
Next question.
Khushbu says, how many questions are expected from FRA? And also
48 questions, Khushbu.
Okay. And what is the minimum marks to clear the exams? Pooja's asking.
Minimum for the whole exam, at least you should aim to score 70% in the exam. Generally in the CFA course, there is a cutoff. If a lot of people have scored above 70%, then they cut it off. They do not generally pass more than 37 or 38% of the candidates giving the CFA exam. That has been the average. So you should aim for at least 70% in order to be fairly sure that you pass the exam. Yeah, yes, next one.
Okay, Vandana wants to ask, is there a dress code for the exam? Whatever's comfortable, should we stick to formals?
No, there's no dress code. Just whatever makes you comfortable. You don't have to wear formals. You can wear shorts or whatever you feel like. Whatever makes you comfortable. Just make sure you are aware of the weather in whichever city you are giving the exam, and be flexible with the clothing. You can take either jackets or shawls, because even in summers or even in places where the weather is not too cold, it can get cold in the exam center.
Vijanta is asking whether the CFA exam is paper-based or online. So, could you clarify that?
It's paper-based. If the CFA exam is paper-based, you will be given a question sheet wherein the questions would be categorized based on the topics, and you would be given a separate answer sheet. So you would have to have the recommended pencil that is recommended on the CFA website, and use only those pencils to mark on the answer sheet. Do not use the pen, because your answers will not be recorded. Use only the pencils that is recommended on the CFA website.
Also, okay, there's an important question coming from Nisar. He says, can you explain how to memorize formulas quickly for ratio analysis? So could you elaborate on that?
Yes. Sure. The best way, see, I'll give you a few methods or ways to memorize formulas. Use whatever works for you. You could either have, a whiteboard in your room right opposite your bed, and whatever you read in the evening, you can write those formulas on those whiteboards, and then, keep looking at it throughout the day. The moment you get up, the moment you sleep. Only unless and until you have them in front of you all the time, you won't be able to memorize it, because there are a lot of formulas. They have to be on your tips. And also, you could write them on a piece of paper and keep it with you throughout the day, and just keep referring to them every half an hour, 1 hour, and that's when they stick with you. Otherwise, you'll just forget the time you reach the exam center.
Ronak says, do we have to memorize the last chapter in FRA topic, or will sheets will be provided?
Which is
I'm not too sure, Ronak. Ronak, can you please type out which you were asking? In the meanwhile, I'll ask another question. Red flag something, he says. No, Ronak says red flag something. And other
flags? No. Yeah, you need to remember what are the red flags. If you read them, you don't have to memorize as such, because if you will be given the option, you will be able to identify them. You won't have to write it in the exam. So the best part is to read it a couple of times, and you automatically get a hold of it.
Yeah, also there's another question coming in. Sudhanshu says, will the two sessions have different topics, or will it be a mix for all? And also another question is, are tables given on time for statistics? So, yeah, can you take both of these up?
Yes, you will be provided tables for statistics. Not a problem, don't worry about that. All relevant tables will be provided. There could be a possibility of being provided with extra tables which are not required, so don't get confused. Okay? And which was the other question, Yashu?
Two sessions, do they have different topics, or is it the two sessions have combined questions from every topic?
It is combined. The topics, say for example, FRA you would have in the morning as well as in the evening. Some topics would be tested in the morning, some topics would be tested in the evening, or one particular topic could be tested in the morning as well as in the evening. There is no fixed thing as such. So be prepared to answer any topic in the morning and any topic in the evening.
Himanshu has...
The exam would be divided by topic. Sorry.
Can you also tell, there's another one, are we allowed to take two BA2 plus calculators from Darshan? So is that allowed?
No, you are not allowed to take two calculators. You are allowed to take only one calculator. You're allowed to carry extra batteries for the calculator though. But make sure you are able to change it very quickly if you are carrying extra batteries.
What topics are recommended to be studied from the curriculum is what Himanshu asks. I think we've covered it up in this session. That's what the session was about.
Yeah, I can take it through those topics very quickly. Just make sure you have inventory covered up properly, bonds, leases, earnings per share calculations. So these are the main ones, and taxes. These are the main topics you need to cover thoroughly from FRA. Yeah.
So, okay, now these are a few particular doubts. Someone's asking how we record impairment gain or loss for goodwill. So Anjali, you can simply post it on our forum or drop in a mail to yashua@eneve.com. And oh, Ashish has another question. He says whether normal calculators or scientific calculators. So those are financial
No, no.
calculators, I believe.
Yeah, these are financial calculators. Both the models for HP and Texas Instruments calculators are mentioned on the website. So make sure you use only those models. Okay.
Right. I'm guessing he's an engineer, you know, just like me. So you'll have scientific calculators and normal calculators.
That's
Uh,
okay.
the rest of the questions, I believe they're all again very particular ones. There's another one from Ivan that says, can you repeat the fraud triangle again, please? The conditions. So could you repeat that, as that was a part of this session? And also I have
Fraud triangle,
yeah, fraud triangle as well as a valuation allowance. I got several requests for valuation allowance. So can you repeat these two topics just once again?
Sure. Before that, I want to take this question by Sayantan Ghosh. Is Schweizer note enough or any other material? I think that's the more relevant one. So let's take this up first and then we'll take up the other ones. Yeah. Okay. So Schweizer material is enough. Any topic that you are not able to understand from the Schweizer material, you can look it up in the CFA books. But I would suggest, yes, stick to Schweizer material and make sure you are able to read the material at least 3 times before you go to the exam. What happens generally, what mistakes candidates make is they spread themselves out too thin. That means they try to cover material from the CFA books, from Schweizer, and from any other sources that they could get hold of. Just stick to Schweizer notes. They are more than enough, and then you will be able to pass. And just make sure you are able to solve all the problems at the end of Schweizer notes. And also try some questions from the CD that is provided in the Schweizer notes.
Okay. Yeah.
Okay, so the question was fraud triangle, I guess, right?
Yes.
So the fraud triangle has 3 conditions present, which is the incentive and pressure, the attitude and rationalization, and the opportunities. These are the 3 conditions for fraud. Now, each of these conditions have certain factors or conditions within it. You need to identify that. Now you can look it up in the Schweizer book, all the conditions, read it up, and be able to identify which condition is applicable to which risk factor. Okay? Yeah, Yashu, any other question?
Yeah, valuation allowance. So could you take up that one?
Yeah, valuation allowance is generally created on deferred tax assets. A valuation allowance is created for deferred tax assets that are not expected to be reversed. When that happens is a company has a large deferred tax asset account in the balance sheet and the company is not expected to make profits in the foreseeable future. Now, if the company is not expected to make profits in the foreseeable future, it cannot take advantage for the tax assets to reverse. The company has to be profitable. If the company is not profitable, it cannot take advantage of those tax assets. So therefore, a valuation allowance is created for deferred tax assets. The valuation allowance is a contra account. A contra account means it reduces the value of the controlling account. Say for example, depreciation is a contra account for plant, property and equipment. Similarly, valuation allowance is a contra account for deferred tax assets. Yeah, Yashu, next one.
Okay. Jugal has a question. He says, I'm not able to understand the calculation of change in retained earnings. Could you please brief that once more?
Sure. Yeah, sure. Now, change in retained earnings on the balance sheet, if you look at the beginning value of the retained earnings, and I'm trying to type, is that okay? Ending value of retained earnings minus beginning value of retained earnings on the balance sheet is equal to net income minus dividends declared.
Okay. We cannot say everything properly. If you speak, that'll
Now
do it.
Okay. So change in retained earnings is this dividends declared is not the cash dividends paid. Now, if you go back to the balance sheet, and if there is an item on the balance sheet of dividends payable, look at the change. The change in dividends payable and the change in dividends declared, take the difference that is equal to the cash dividend paid. That's how you find the cash dividend paid. It's a common question on the CFA exam to find the cash dividend paid from the income statement and balance sheet information. If you're still not able to understand it, I would suggest the best option is to post it on the forum, and you can write it and show you all the formulas. It would be better over there.
Right, which brings us to the end of the session, as we've already exceeded by a considerable time. The rest of the questions, they're all very specific, so you can all post it at the forum. In any case, we will have a blog coming up which would essentially be answering all these questions. So you can even keep checking our blog. In the meanwhile, thank you, Ami. Thank you. Do log on for the rest of the series. It will be tomorrow same time around 8 o'clock IST, 8 p.m. IST. Thank you, everyone.
Thank you all for attending the session. All the best for the exam.
Yeah.
Okay. Bye.
Bye.